Hi, this is Ripe Trade, and I wanted to quickly talk about the influence that bond prices have on stock prices. I'm sure some of you have probably recently noticed that the S&P here has rallied and the bond prices have declined. This chart right here, the blue line, is a price chart of the long bond futures in terms of price. And what we've got here is a divergence where stock prices have gone up, bond prices have gone down. Bond prices are a fundamental influence in future stock returns. You know, when bonds get cheap, stocks become less attractive, and vice versa. You might even remember back on the 16th, we talked about buying the S&P based on an overbought bond market. Okay, in that case, the bonds were less attractive, stocks were more attractive. So I just want to quickly, we're going to do a back test here and show historically what has happened when you've had big advances in bond prices and big declines in bond prices. All right, so what we're going to do here is we're going to test this strategy on the S&P. All right, and our exit strategy is just a simple 5-day exit strategy. Before I want to start, what I want to do is I want to just test a random entry and 5-day exit. So the rule is just, if true, you buy the markets. This is your average 5-day holding period for the S&P futures. This is based on one S&P futures contract trade. The average return has been $154, and this is back since, what is that, 1982, which is when the futures started trading. It looks just like a chart of the market there. All right, so typically your 5-day holding period, the futures are going to move about $154 per contract. All right, and then what I want to show you is historically, this is the rule here. If the rate of change in the bond market, the TQ is the long bond futures, for 5 periods, so 5-period rate of change is just how much those bonds have moved over a 5-day period, and is greater than the percentage that bonds are up. And with that, what I can do is just go in and use that as a variable. The percentage bonds are up. I'm going to test from 0 to 5% in increments of 0.2%. All right. So if I run the strategy, and see in this column here, it's just being sorted. This column here, it's being sorted by the average trade size. Again, you remember the average trade size for a random entry was $154. And you can see here, this column shows you that's the percentage. So typically, the larger percentage that bonds have moved up over that 5-day period, the larger your average trade is. I could show you a little bit more, better of an example here with a chart. If you just plot the average trade here versus the percentage move over that 5-day period, you can see it's a nice, pretty linear slope here. The greater the percentage that bonds move up, the greater your average trade has been. All right, and that's since 1982. Now what I want to show you is the opposite of that. When bonds are down based on a percentage. All right, so we're going to get rid of this one, and we're going to test from -5% to 0, again in increments of 0.2%. So you can see again here, it's being sorted by average trade, and the largest loss was -5%. And there was some that did make money, but those I would call just outliers. Those are just and this is what the slope of the distribution looks like. You can see over here, that's the -5%. You can see the average trade size is lowest over here. The more bonds have moved down over that 5-day period. All right. So right now what you have is bonds have moved down, stocks have moved up. I would think that this is pretty bearish for the market. I wouldn't use this type of setup as a standalone trade entry criteria, but it's definitely a solid building block to start with. and in the near term here, I'm going to be looking for opportunities to get short the S&P. I just got to find a couple of other things that make the trade work a little bit better. But this is just an example of taking history, the facts of history, and taking those facts and using it as a building block and just stacking the odds in our favor. What we're looking to do here is use the past to stack as many odds in our favor to have positive results going forward. This is Ripe Trade. I hope you enjoyed this video.